What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on natural gas prices.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news and I will show you what news might be the driver for the upcoming weeks for this asset. And at the end of this video, I will share my thoughts and my technical analysis, and I will show you what should we expect next. So first of all, let me show you the ticker symbol BOIL. It is a leveraged ETF that is based on the natural gas prices. And I made my previous video right here at this point, and I've told you this was the most bearish ticker symbol among three of them: BOIL, natural gas spot prices, and natural gas futures. Because it broke the range of resistance. As you can see, it broke it to the downside, then retested, but these two retests basically was a false breakouts. As you can see, it broke it twice, but the second breakout was made on the pre-market hours, and with the beginning of trades it went lower and it broke even its previous swing low. As you can see, it was quite a strong range of support at around $61.7 mark. And for now, it broke it, and it broke it with quite decent volume. So, what should we expect next? I will show you in just several minutes. And for now, let me show you some news that might be the driver of this asset. On Reuters.com, we can find this article that was published on July the 7th, and it's titled, "Europe's gas storage is filling too fast." And let me quote you this. Europe's gas storage is filling more slowly after prices fell sharply in the first half of the year, but a further slowdown will be needed to prevent space running out before the start of winter 23-2024. And this means when their gas storages are almost full of gas, and let me show you that right now. Inventories were so high at the end of winter 2022-2023. Storage sites were already almost 79% full on July the 4th, compared with the prior 10-year average fill of just 60%. And this means that they have to slow down the refilling of these storages, and this means lower demand on natural gas. On top of that, let me show you that Reuters also published this, that China imports more LNG, but not enough to drive spot prices. And yes, on the one hand, China is a huge market, but definitely, for now, they cannot replace all the demand from the European markets, and that is why they cannot affect the price of natural gas in general. On top of that, if we take a look on a bigger picture, if you type in Google search bar natural gas prices and switch to news tab folder, you will see that the total sentiment of the titles alone is not so bullish. All of these articles are pretty much quite neutral or bearish in terms of the price of natural gas. This means we still have the possibility to see lower price action on these ticker symbols. And let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, let me switch to natural gas futures. And on my previous video, I've told you that we were in the consolidation phase right after this movement to the upside. And as you can see, according to Elliott wave theory and according to my breakdown, we completed 5-wave structure to the inside the third wave to the upside, and then we have to see this cool down by let's say simple zigzag, and it is the usual shape of consolidation phase. And this might be the lowest point of the fourth wave, or we might see even lower price action to hit that might hit 0.5 at $2.5 mark, and the golden pocket range in the range in between $2.43 and $2.46. And I have to say that for now it is too early to make the assumption that this retracement is finished. We have to see at least, I think, at least one more leg to the downside that probably might hit the 0.5 Fibonacci retracement level. And I marked this level by pulling the Fibonacci retracement tool from this bottom to this top. And in this case, we might see the trend reversal. And on a bigger picture, we might have the next leg to the upside, the fifth wave, from this bottom to somewhere higher. And I have to say that the range the range of resistance that we have right now. We basically have several of them. The most recent one is this one at $2.88 mark, and this range is the range that might invalidate the entire counter of this formation. And let me remind you that it is a symmetrical triangle, and usually it is a trend continuation pattern. And on the bigger scale, if we zoom out again, let me show you that we are in this downtrend from this all-time high at around $10.042. We have our A wave, we have our B wave, and we are forming our C wave. And internal breakdown of the C wave should have a 5-wave structure, and we have 1, 2, 3. This might be the fourth, and the fourth wave also might be in the shape of a triangle. And this is the trend continuation pattern, and this is why we might see another movement to the downside if this asset will not break its swing high at $3.054 mark. Let me show you this range somewhere here, this previous swing high. And yes, for now, we have this opportunity to see the trend reversal at $2.5 mark, but I cannot count on this movement, and I cannot force any trades out of this range because the volume is quite suspicious. We have to see more confirmation, and we have to see more clear pivot points on natural gas futures. But so far, as you can see, this movement is very choppy, and it is very difficult to make a breakdown inside these waves. That is why I think in a C wave from this top, we might have this is our first wave. Second, we are in the third wave. Then we should have another leg to the upside, and then another leg to the downside. And it is not crystal clear for now. And I have to say that that is why we have to patiently wait. Market definitely will reveal itself. And that is how technical analysis works. You shouldn't force any trades, because if you do so, you will most likely file some losses. You will file some losses with these trades. So, and what should we expect next from the ticker symbol BOIL? I have to say that we still have the range of about $59 to $60 as the range of support, because right now we have a perfect bounce out of this range. But on the other hand, we broke this range of support at $61.63. As you can see, we had several touches of this range right here, and right here. And that is why I think we still have at least one more leg to the downside. And then we might see the retracement to the bullish side, and this might be the beginning of new short-term uptrend. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye.
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, doing no cap. Only God wants you.